Hello traders, Gary Wagner here. It is 12:10 in Honolulu, 5:10 in New York on Friday. Happy Aloha Friday, as we say on the islands. It is the 16th day of December, 2022, and this is the daily report for gold and silver, our weekend review. Although we saw extreme volatility in gold this week, with a $30 plus rise on Tuesday and yesterday's $30 sell-off, when we look at our weekly chart, we can see that gold in essence closed unchanged on the week, down a couple of dollars at best. Currently, we have the most active February contract of gold futures at 1803 after factoring in today's gain of $15.30. That was in light of headwinds created from dollar strength. The dollar gained 0.26%, with the index currently fixed at 104.805. Lastly, silver did have respectable gains today, 0.45%. That was a gain of about 10.5 cents, with an ounce of March silver currently fixed at $23.41. This first chart is a weekly candlestick chart of gold futures, and we can see that although the last 2 weeks have both contained higher highs than the previous week and higher lows, it is the open to close that was very narrow, about $2 this week and almost exactly the same last week. It shows you that we have bullish market sentiment, although we have seen price consolidation over the last 2 weeks, with this week actually opening and closing below last week's settlement price. And although we are extremely bullish long-term in terms of where we believe gold prices will head next year, over the last 2 weeks we have seen gold prices oscillate both above the 200-day moving average and below it. To me, this indicates the potential for the support level at 1785 to hold and see higher prices through the last couple of weeks of this calendar year, or a continued correction from the highs that we witnessed on Tuesday. And if we break below 1785, we would look at a major support level at approximately 1755 as major support. We have converted the daily candlestick chart to a Henkin Ashi chart, or Japanese average, which also indicates the potential for more further price decline. And as I said, a break below 1785 would make a strong case for major support to be tested at approximately 1755. The potential that we will see a further decline in gold next week is also suggested when we look at a three-line break chart. You can see the pivot bar right here, and what that indicates is the potential that we will see gold break below 1785 and possibly test 1760 to 1755 next week. We are looking at a daily contract of silver futures. And in this particular study, we have created a Fibonacci extension from the lows of the last leg of this rally, what we're labeling as a wave 1, that began at around 1740 and concluded at $21.28. We then start the extension at $18 per ounce, and that is the conclusion of this correction here, and then calculate an extension of 1.618, because a wave 3, if it is a strong wave, and silver has been extremely strong, can go that high. Earlier this week, it actually breached that on an intraday basis. It tested that the following day, meaning Wednesday, came down hard on Thursday, and challenged the 23.6% fib retracement area earlier today, but recovered well above it at 2341. That tells me that there is potential support, just like in gold, at the 23% retracement level, but a solid break below that would bring the 38% retracement level into play as a major level of support at $22. So for both gold and silver, long term, we remain extremely bullish for next year, but need a little bit more data to determine if, in fact, we will see a correction truly develop next week following yesterday's strong price decline. This has been Gary Wagner wishing you, as always, good trading. We will talk to you on Monday for the next daily update and review. Bye-bye.